Welcome to the Freedom Fire Podcast, a podcast where leaders from all over the world come and speak to the one and only
Wainaina.
Today's guest, we have Simba. Simba is a founder of Henwood Advisory, where he helps people with their finances.
As the markets go up and down, the worst thing that you can ever do is to, with the way inflation is going, you now need a safety net.
In the day and age where we're living in, money is everything. The way you manage your cash flow, tax strategies, money is your oxygen, and cash is everything.
I'm a big believer that if you can't compete economically, then there's no conversation.
Money has got nothing to do with money. Money has got everything to do with psychology.
Back in the continent, these are conversations that are missing.
As a CEO, as an entrepreneur, this is one of the most important episodes you can watch as Wainaina brings forth the biggest leaders from all industries as she comes to teach, to learn, to inspire. Get ready as you'll learn so many insights from Simba as he is teaching you financial literacy here in this episode. Stay tuned, don't go anywhere, and get ready for war.
Welcome to Freedom Fire Podcast, Simba Chilimanzi. How are you?
Thank you, Stace. Good.
Lovely to see you this morning. It's been a minute.
A very long minute. It feels almost like half a decade.
It's been quite some time, but for the sake of our listeners, who is Simba?
A person born in Africa, trying to find his way.
Okay, trying to find your way. That segues to our next question. Let's talk about your personal journey and what is it that you do for a career?
Yeah.
And what is it that matters in life for you?
My personal journey has been going back to the past, if that makes sense. So when I started out, I was raised by my mother and my father. So their journey, they were entrepreneurial people who did well for themselves, but I always felt that there was something that was missing, and what was missing was a formula, and a formula towards their success. And in figuring out that there was a formula that was missing, I didn't know what the formula was, but I went on a journey to acquire that. And I found myself over a 20-year journey to try to figure out the journey of money, but the relationship of money. How do we have a healthy relationship with money? More importantly, how do we use money as a tool to get us to where we get, or rather to get us to where we need to get? And in going through that journey, I've become an accountant, I've become a stockbroker, and I've ended up as a financial advisor, using the skills of both an accountant and a stockbroker to then now paint a big picture. And I would say, to a minor degree, I've also become a shrink.
Right. So what is the connection, because that's quite powerful, what is the connection between being a financial advisor and being a shrink? What is it that you need to understand?
I think there's nothing to understand. It's more that you need to be quiet and allow them to talk. Because it's in the talking that you find out what the problems are. It's in the talking that you hear what the solutions are. In 9 out of 10 times, people will tell you what it is that they're looking for. And all you need to do is just to point direction at that.
Right. Interesting. So let's go back to something you said about relationship with money.
Yes.
Why is that important?
It's not the relationship with money that is important. I think it's the relationship with self that is important.
Right.
And once you understand the relationship with self, then you find out what is it that you want to achieve in life. In my industry, we call that a goal. So most people have goals, but very rarely do we sit down to actually think about what are our goals. So what is it that you want to achieve in life? You probably want to be happy. And what does happiness mean for you? You probably want to travel the world. And for you to travel the world, how much money do you need to set aside? Then now it becomes financial. But really, the finance is the last thing that I've mentioned. It's more what you wanted to do. You've got a child. What is your desire and what's your wish for them? You probably want them to get a good education. Why? Because you probably want them to get a good job. Okay, what does that good job look like and how much does it cost to actually educate them? Then now we're talking about finances, but it's mostly to do with the person, and maybe it's informed by the fact that I'm an African, and from the people that we come from, we talk about Ubuntu. I am because you are, but in that you have to locate the I.
Right.
So I tend to find it's the person first where finance starts.
Interesting. We bring our heritage into the conversation, and it's powerful. I am because you are. But also there's a level of that brings the handout mentality.
Yes.
As a financial advisor, what's your thought on that?
A handout mentality, I can isolate that to the African community because that's where I see that mostly being an issue. Ironically, when I deal with my Western clients, it almost never comes up.
Right.
There's a firm boundary. This is my brother, this is my sister. I depend on them emotionally to support me, and they depend on me to emotionally support. Then this is my parent. They brought me into the world. I owe them a debt of gratitude. But apart from that, they're my friend, first and foremost. In an African sense, I find there's an issue that we colloquially call black tax. And when we come to black tax, there's something to do with our structures, and I'll say it in its modern parlance. And then if you remind me, please, there's also a lot to do with the traditional history and the culture. So that'll be the last thing that I'll touch on. So in the way that you've phrased it, it's topical in that there's entitlement that comes, hey, you're older than me.
Yeah.
So you're the older brother, you're the older sister, or you're the firstborn, or within the order of the family, you're older. And in that sense, you have an obligation to take care of me, right? Or, hey, you're the one who's overseas in the diaspora, so you've got access to more resources. Why don't you help me out? But not stepping back, again, looking at the I and locating yourself relative to resource. How can I help myself? Or rather, before you even come to helping yourself, where am I, what am I doing, and how am I achieving self? And I think there's a lot there. Don't know whether there's stuff that you want to latch on, or do I continue?
No, there's something I want to dip in there with who am I, what am I? How often do we get to ask ourselves these questions in the journey that, and through your client, through your own journey, how often do we stop to really ask, who am I? Because if we can answer that, we can achieve so much in life.
Yes. I would say I've been fortunate enough that at my stage in my career, the people that I deal with are very successful. So, and success, I think, just means removing the layers. And it's removing the layers of rubbish, if I can say that. I would have used a more expletive word, but it's removing the rubbish, or rather making it more palpable, removing the insulation around the wires. So there's a live current that's there, but you won't feel the live current if there's insulation around it. So you want to remove that insulation so that you can get to the electricity. And in saying that, okay, it's a metaphor, it's missing the point. And the point is when people have spent time with themselves to find out who they are, then they're meeting their goals, or they actually find out they're not meeting their goals, they can spend more time to figure out why they're not meeting their goals. It's maybe because I don't understand enough. It's maybe because I need a coach. It's maybe because I need somebody to give me direction. Or it's maybe because I think it's Donald Rumsfeld who says there's the non-nons are non-nons and there are non-anons. So your question still explicitly was, to what degree do we sit down and ask who we are and find ourselves? Successful people, I find, are always doing that. Unsuccessful people might be doing that, but they don't tune into the frequency.
Right, the frequency matters.
Yeah.
Because in everything I do, and I teach and I coach and I sit down with CEOs, and I'm talking about a sense of belonging, to be able to self-lead, to then be able to lead your people and to bring your team together. Because no matter, when I walk into organization and there's chaos, I'm like, okay, let's have a conversation.
Yes.
Because it doesn't get this chaotic.
Yes.
If you're in order.
Yes.
If your house is in order,
Yes.
it doesn't get this chaotic. So something is imbalanced somewhere. And the first place we start is, who are you?
Yes.
And it's fascinating to see how less frequent we actually stop and think outside everything, outside me being a CEO, who am I?
Yes.
Because when we answer that, then we can answer so much, and we can lead ourselves and lead others. Now, I don't want to miss out on something you said. I remind you, because I do want to get out of the historical part of who we are, and I am, because you are. You mentioned about traditional and historical and culture that leads us to be the black tax, or lead us to the handout mentality. Let's get back to that, because circle back to it.
If you paid attention to you asking me about who am I didn't say I'm a financial advisor. Neither did I say I'm a finance professional. I defined myself in terms of the core that makes me who I am. So I then go back to the issue of black tax. The issue of black tax, it's like when you describe things, there's nothing that is either positive or negative. It is how we define it, or how we perceive what we're trying to define that makes it good or bad. So when I hear black tax, I hear a sense of burden and heaviness around the issue of black tax. But if you put it into its context, on the savannas of Africa, we lived as a community. And in that community, we were codependent.
Right.
And in a codependent community where you have milk, I give you a hide, you have a piece of meat, I give you a plow. We were in a circle that was that survived together. So in an environment where you're within a strong community, the issue of black tax shouldn't matter, because if you help me, I'm going to help you. Right? And there's been many times you've made a meal for me, and we've had a barbecue, and probably bring a bottle of wine, and we celebrate with mutual friends, and we have a conversation. In that environment, am I saying that you've texted me because I've come with a bottle of wine?
No.
Exactly. So if it's not black tax in that instance, then maybe it's an issue of looking at other diasporic cultures that have been doing this for maybe thousands of years prior to us. Because, yes, we've walked, they say for the Southern Bantus, which Zimbabweans, South Africans, Mozambicans are, that we've come from the Great Plains around Tanzania, Kenya. And if you look at the Bantu language and its evolution, they say we probably even started around the Nigeria area. In that environment, we've walked and we've traveled and we've evolved and we've adapted. So as we've come to become, for the majority of us as first generation people out in the diaspora, it's now an issue of us adopting to the new environment. So if you look at the Jewish culture, they've been going into new environments and they've been assimilating, understanding what's happening there. If they need to tweak their names and anglicize them, they've adjusted. So back to your question, as in, what was the original question?
We were circling back to something you mentioned in terms of black tax, that the tradition, history, and culture impact on it.
Exactly. So in that environment where the community was intertwined, if I stretched my hand to you, you would help me out and I could help back. But when you're no longer in an environment where you have that resource, then it's now contingent on you to resource yourself wholly before you go out and you reach out to other people. And that might sound rather selfish, but that's the message that we consistently get when you're on an aeroplane.
Yeah.
In case of an emergency, what do they say to do?
The oxygen mask will come. You put on yourself first.
Yes.
And you help the next person, including your child.
And I love the process that you've just gone through. So the oxygen mask will come. So that's resource, right? You put it on your face. So there's an action that you need to do to help yourself. Then once you've helped yourself and you're now breathing and you're now making it in life, and you got resource, right? You're now plugged into a resource. Then and only then do you then help the kid. But you love the kid. So you don't panic and you put the mask straight onto the kid, because you're going to die and you're going to leave this young thing. So back to the issue of black tax, I'm not saying we don't help family, but I'm saying let's resource ourselves to the point of success. Then once we're there, utilize those resources to then go and reach out to the family.
I am such a big believer that sometimes we complain we don't get the seat at the table. sometimes we complain that we're not included in the forums where we should. Or the disparity between men and women, gender disparity and whatever. But I'm a big believer that if you can't compete economically, then there's no conversation.
Yes.
So how do we start to set ourselves up financially? If today I am a listener and I'm thinking I'm really in a mess and I want to get myself sorted as a financial advisor, where do we start?
I would be mindful in terms of the wording and the language that we use, because you've mentioned there, how do we then compete? I don't think, again, going back to our culture, we're inclined or want to compete. I think we want to participate, but participate fully. So if you want to participate fully, then I think you've mentioned something earlier before we started running the recording, that if you're speaking amongst people that you're coaching or speaking with peers, you want to say, how well located are you? I.e., have you identified health and wealth, actually, health and wealth within yourself. Then once you've identified health and wealth within yourself, then and only then can you acquire resources. So, okay, you're in a mess. Where do you start? You start with step number 1, assess yourself, right? Where's my cash flow coming in? Equally as important, maybe even more important, where your expense is going out. And what's more important is not how much money you're making, but how much money you're keeping. So assess your bank account. You've been working for 10 years. How much do you have saved up? You might have nothing in savings, but maybe you've got a house. You might have nothing in savings, but maybe you've got other assets. Maybe you've got money in super. You might have nothing in savings, but maybe you own a fleet of cars. Maybe you're into cars. Or maybe you own art. Once you figure that out, then and only then can you go to the next step. But you have to do an internal audit. So it's an internal audit first, and then a financial audit. Then and only then can you then go to the next step. And then the next step is, hey, can I help myself and can I figure out how to get to that number? And as we've already said earlier, the number is informed by the need of your child, the need of your lifestyle. And then and only then can you go to the next step. You could probably do it yourself. Many people do. But many people also get overwhelmed, and you probably don't want to spend 10 years, 20 years, 5 years making mistakes to then make step number 1. In which case, for my clients, they end up looking for me as a professional and they say, Simba, we have this as a situation. Here's my assets. Here's my net worth. How can we make this better? And I will then look at my toolkit and I say, from what I understand of mind, spirit, body, from what I understand from psychology, from what I understand from accounting, from what I understand about tax law, how can we structure things efficiently? You can put your things through a company, you can put your things through a trust, you can do that via partnership, you can do it as a sole trader. What are the advantages? What are the disadvantages? How can you achieve better efficiencies? Are there arbitrages as to how you can use financial products that are out there to optimize and financially leverage your situation? And by leverage, I mean putting yourself in a situation where you can accelerate the outcome of what you're looking for.
Oh, great. I think that's a really great process. So for somebody who's thinking, oh, Simba, that sounded great, and I'd love to have a conversation, where do they start?
So they start by looking at my details.
Yeah.
My details are located on my website. My website is henwoodadvisory.com.au. Located there are 2 important details, my email address and my phone number. And they can reach out. We have a conversation. And as with any conversation similar to the one that we're having, it's an organic one. Many conversations end up in, hey, I've identified your need and here's how I can help you. Some few conversations are, I understand there's a need, you're not yet ready, and how about we postpone things, you figure out A, B, C, D, and we start working on that. Some of them are even more intricate where, yes, we can help, but maybe it's a 5-year journey and there's multiple things that we need to do. And normally I find in that last bucket, it's business owners that have trusts, that have companies, and all these complicated structures, in which case we end up project managing it. That's not to say for individuals you don't project manage, because quite frankly, the only accurate thing that we ever provide by an advice structure is the initial piece of advice. Then after that, everything else then changes. So you come and you see me today, tomorrow something happens with your child, your situation has changed. Something happens with your work, your situation has changed. Something happens with your health, your situation has changed. And it becomes an ongoing piece thereafter.
Right. So I want to circle back to something we talked out of camera, and we were talking about a spider graph
Yes.
or a complete circle.
Yes.
And I want that to come to our client because it was quite powerful, but it was outside.
Yeah.
So let's go back to what you've learned in this process of coming up with a formula.
As opposed to it being a formula, it's more a structure or a way of visualizing life. So you can pick up, let's call it 5 examples of things that you want to measure. So let's say, because we're talking about money today, we say wealth, right? And let's call it a dollar in the bank, a bank account. So how many dollars do you have in the bank account? And let's rate that, say, from a scale of 0 to 10. So think of it, if you're listening to the audio, you've got basically a cross, so that's 4 points. Then make those cardinal points. So if we're to start with cash, that's the first line going up to the top, and scale that from 0 to 10 and rate yourself from a 0 to 10. And then something else that's important to you, let's say it's your health, rate that from a 0 to a 10. So that's the second bar to your right as we're moving clockwise. Then the bottom bar, let's look at that as, say, your spiritual health, however way you want to express that. And let's call that a bar from 0 all the way through to 10 and rate yourself. Then pick any other things that are important to you, use a similar scale, and continue moving around the clock. So now we're at the 4th clock, we've finished our cross. Then now we can have multiple points in between that cross to make 8 points, and continue rating yourself along those lines. Once you're finished, we've got 8 because we've divided 4 twice. We've got 8 points along. And once you've rated those, start connecting them. And as you connect them, the goal is to have a perfect circle. If you have a perfect circle, then your life is in balance. You don't even need to go and see any other professional. You're doing well. If any one of those lines are not on the outside perimeter, then they're going to go in and they're going to become a spider web. And when there's a spider web, then the wheel does not have its perpetual motion. And when you don't have perpetual motion, you want to find ways to then fix that. So it could be a health-related thing. Maybe you need to reduce the amount of alcohol you're having, and maybe you need to exercise more, maybe you need to do both. Back to the issue of finances, maybe we need to make more, maybe we need to save more, maybe we need to use more tax-efficient structures. So rather than you earning all your income as a wage, which is taxed at the top marginal rate, maybe you need to have a side hustle, and that side hustle maybe needs to be in a company. And company is only taxed at 30%. If you're on the top marginal rate, you're probably paying tax at almost 50 cents in the dollar. If you're using a company, you're paying tax at 30 cents in the dollar. And if you don't need that money, then now you've got a permanent tax arbitrage. Because at some point you're going to be retired, you're not earning any taxable income, and now you can receive all those earnings from your company totally tax-free. So it's a way and it's a strategy, one amongst a plethora that would explore.
Amazing. And that was a quick tip there for some people that are listening. If you're in Australia, by the way, I don't know if that works in other countries. I'm sure you'd have to speak to a financial advisor in your country. Now, let's talk about keeping money.
Yes.
What are some of the things we could be doing to keep... Actually, let's start here. What are some of the contributing factors you've seen that impact on how we keep money?
There's the issue of keeping money, which means that your top line, which is your income, should be bigger than the expense figure. So that's the first issue that we need to deal with.
Yeah.
Right? So the first thing that I get my clients to do before they come and see me is to do an audit of their cash flow. So that's the first way to keep money. Then the second way to keep money is how much money is coming your way that is not necessarily being spent. If you live in Australia, fortunately, and you're working, you know you're guaranteed at least significant portion of your income is going by way of superannuation. So you're keeping money, right? So it's not dire.
Yeah.
Then from then onwards, you open a bank account. You put money in a bank account. And for the majority of people, the amount of interest that you earn on a bank account is not worth it because it's being eaten away in inflation. So for the majority of people, rather than keep money, you should actually be investing money. Because why are you keeping money when you're earning money on a monthly basis?
Yeah.
You shouldn't be keeping money. You should be investing money. You can invest it in yourself, which is one thing I always encourage highly. You should be investing it into assets, property, investments. By investments, I mean shares, crypto, if you're into it. An area where you have a passion and you understand how to monetize. If you've got a hobby for which the thing that you're making makes you more than the hour that you're investing, then you should be investing. That's the way that I think about keeping money.
Great. And you've brought me to something I wanted to come to. So it's about how we make money, how we keep money, but how we grow the money.
Yes.
So let's come to the phase of growing the money, because that's where really it becomes really complicated. Most people can actually make money and know how to make money.
Yes.
A good substantial number can keep the money.
Yes.
But then, yes, traditionally we've been told keep it in the account.
Yes.
So how do we grow money?
So you grow money by putting it in things that work on themselves. So you want something where whilst you're sleeping, it's growing. And real estate is one of the best places to do that. You put it into your house grows at a phenomenal rate within Australia, totally tax-free. It's the best investment that you can ever make if you're in Australia. Own your house, own as much house as you can, early as possible, but make sure that it's not going to suffocate you in terms of the mortgage repayments that you've got. And that's the best thing that you can do to keep money within Australia. If you can and you're then fortunate, build a business. Have something that is making money for you. That can be expressed as an actual business, or it can be an investment that is a business in itself. If you've got a property and it's earning rental income, it's a business. If you buy shares, you own a portion of that company. As that company grows and makes an income, your investment is growing. That's your business. If you've got dividends that are coming through, that is your business. And ideally, if you've got dividends that are coming through, they should be invested back into the investment. So unlike the old way when we were growing up and would see our uncles, aunts, and grandparents, when they were running a tuck shop or an actual shop, and they would give you some of the groceries off the shelf, you don't do that. You only do that out of the personal amount that you've given yourself to spend. So allow your business and your investment a lot of time. Be patient with it, nurture it. Hey, how is my investment doing? It's my property. Am I maintaining it? Does it have cracks? Is there a leaking roof? It's a share ownership that you've got. Is that share doing what it should be doing? Why did we invest into it? We invested into Apple. Is Apple still having strong, solid sales? We invested into Woolworths. Is Woolworths still the most competitive company to be investing in? Can I buy shares in Audi? If it's privately listed, can I actually find what is called a private investment, which you'd find for very sophisticated people with very big numbers, people that are dealing with either investment banks, private capital, private equity, or venture capital. So there's from the simplest thing to the most complex thing that you do at the top end of town with high net worths.
Simba, I'm a nurse, and the numbers might not be my best area. And all I just want to do is go to work, make money, and not have to think about all these complications.
Yes.
So how can I go and pick, what is the easiest way to pick something that is going to grow my money safely?
There's things nowadays that are very easy to do. There's apps like, I think they used to call it Acorns, they might call it Rocket now. It allows you to literally say every time you're paying for a coffee, if you pay, say, for $2.50 for a coffee, you've got 50 cents extra. That 50 cents can go into the app. That app will then auto invest. What is it investing in? It's probably investing in what are called ETFs. What's an ETF? Exchange traded fund. You can also spend a weekend just Googling which are the best performing ETFs. But even beyond that, you can, because you're a nurse, you have power. And that's not restricted to just being a nurse. It's also relevant to anybody else who's in any other profession. So if you have a profession, what is it that you're learning and what is it that you have an insight around? So you would clearly have an insight around medicines, right? So of the medicines that you're using, what are the brand labels that you're seeing? Are you seeing Pfizer Pharmaceuticals there? Are you hearing about Ozempic? Who makes Ozempic? Right? I think Ozempic is probably made by Eli Lilly. If it's Eli Lilly, how is the share for Eli Lilly doing? Can you buy shares for Eli Lilly? There is now online stockbroking platforms that allow you to buy shares. So that would be a starting point for an S. Then if all of that is too complicated, go see a professional. Your super fund provider probably as a financial planner who, ironically, you're paying out of your super fund.
Let's go back to investment philosophy. So
Yes.
what is at the core of investment philosophy?
So the core of investment philosophy is understanding what you're investing in and why. So what are you investing in? You could invest into cash. As a financial professional, we would classify things into two main buckets. We would have what we call defensive assets, which is cash and fixed interest. We would have growth assets, which are predominantly shares and property and proxies of that. Then sometimes we've got a third bucket, we've got the fifth bucket, which is alternative investments. So understanding those investments, you've got growth investments, which is your shares, your property, sometimes your alternative investments. Then to complement that, because market cycles always go up and down, unless if you live in Australia, where if you invest in property, it only goes one way, which is up.
For now.
For now. So investments go up and they go down. So when they go down, you want to make sure that you've got some security. Back to that cash that you're talking about, you want to make sure that you've got that cash, which is part of the reason why you're probably asking about that cash and why we're seeing our peers with cash, because you want that peace of mind. But beyond the peace of mind, you then want those funds, the difference of those funds invested. And it also depends on your life stage. We normally have 3 life stages. The stage which you're gathering wealth, which is normally when you're getting an education. You've got the stage where you're preparing to retire, and I would say that should probably start from about the age of 45 to about the age where you retire in Australia, which is normally age 65. Then you've got what we call the retirement stage, so from age 65 onwards, and how you then do your investment philosophy would change based on those phases. The earlier phase, you probably everything that you're making, you're spending. You probably sometimes are even having a balance left over on your credit card, which means that you're spending more than what you're making. The next phase, you're now trying to accumulate assets. As you start to accumulate assets, we're building, in which case we now ask, which of those asset classes are we investing into? Then in the stage where we're preparing to retire, what proportion of our regular income are we putting aside to then ensure that we've got a healthy enough nest egg when we retire? Then for people that have retired, how much of a buffer have we actually put in place to fund your ongoing expense? Because you'll find when you're retired, one thing changes significantly in that you no longer have an ongoing income that is coming in. If you don't have an ongoing income, then now the question is, how are you invested? We normally would say you need rainy day funds stashed away. That would be normally anywhere between 1 to maybe 5 years worth of regular cash flow. So as examples, if you're spending 100,000 every year in after-tax dollars, then you'd probably need anywhere between 100,000 to about 200,000, which is 2 years worth of that saved up. But again, you're not going to put that up as cash. It's going to be somewhere where it's optimally structured. So in Australia, you could be doing that in term deposits or other similar investments. Have I brought up things that you want to explore further?
Yes, and that was interesting in the life stages, and I think you've expounded into it, but let's speak to the person who's actually at that phase of, because this will be most of my listeners, at the very last stage, or you called it the first stage, and somewhat entering the second stage of life.
Yes.
Let's speak to that cohort, because those are the people that are listening to us.
So as you're entering the second stage of life, you've either asked yourself or you've already answered the question of, do I buy a house or do I not? Because it's not everybody who's going to buy a house for multiple reasons. Maybe you've decided to build a business all your life, and buying a house stops you from investing into your business. Maybe you've got your house offshore, because I've got friends that are investing in the countries of their birth because their plan is to retire there. Maybe that business is doing so well that it's generating a surplus of funds, in which case you probably have an investment portfolio within your country. In this case, it could be Australia. So maybe you're investing into shares, you're dabbling into crypto, maybe you're dabbling into property. In that event, you have a structure that is either working or that you're thinking of working. If it's working, then you're now stepping back and you're asking yourself, is it the most optimal? And for you to know whether it's the most optimal, ordinarily in Australia, you'd be working with other professionals. So you'd in regular contact with your tax accountant. So do you have what we call tax efficient or tax effective structures? Because tax rates differ in Australia. If you're earning money in your personal name, your tax rates are probably anywhere from the first 18,000 that you make, there's no tax. Then thereafter, you've got the tax rates starting to kick in, and they end up at the top marginal rate, which is about 50 cents in the dollar. So as you are now investing those funds, how are you investing them? If you're investing everything in your personal name and you're already on the top tax bracket, that means it's a self-defeating process, right? Because you're earning at the top rate, you're being taxed at the top rate, you're getting nowhere fast. So you then would be sitting with your tax accountant or an advisor to figure out what is a better way of investing. Maybe you should be investing it into a company, which is a 30% tax rate. Maybe you should be investing it into your superannuation, which is a 15% tax rate. Maybe you should be putting it into a family trust that allows you to split your income. And those are considerations that you should be having if you're in Australia.
Oh, great. That's actually, and also just not Australia, because I think also financial literacy, which is really key, sometimes back in the continent, particularly for me where I come from, these are conversations that are missing. And the importance of people being able to understand what is the market doing where you are and where you need to invest, and invest in it wisely. Talking about crypto, it's not the Australian property market, but what would you say about it, particularly for those who are listening to us and are from the continent in terms of investment?
So with crypto, I've got almost little or nothing to add, because as a traditionally trained investment professional, investments have valuations, and normally the valuations are a function of the cash that they generate. So when we look at crypto, to the best of my understanding, none of those investments, so if you invested into, say, Bitcoin, Bitcoin, to my understanding, does not have a dividend that it's paying and does not have any income. And because it doesn't have a dividend or an income that it's paying, from a traditional financial planner's training, there's no cash flow, so I can't value it. Then the other way, so we call that a discounted cash flow valuation model. The other way of valuing things is figuring out what their future value is going to be based off that rate of growth. And when I look at traditional crypto, I don't know what is causing it to grow. The only consensus that there is within the market of crypto is that most crypto, in this case I'm speaking to Bitcoin, is there's a limited issue of Bitcoins that are going to be there. And because of that limited issue of them, the more people that want to buy them, the higher the price is going to get up. But then now that leads to a thing we call speculation. And when we think of speculation, we think of back in Holland, there used to be what was called the tulip mania. And in the tulip mania, people used to go around buying and selling tulips. And they only went around buying and selling tulips because tulips at that point were a new world thing. That's not to say people didn't make money out of trading tulips. Lots of people made fortunes out of doing that. But at the end of the day, the market collapsed because there was no fundamentals on it. But the history so far is that some people are making money out of crypto, but equally, some people are losing money out of crypto.
Right. So for somebody who is back in the continent, because as much as we are different, we are similar.
Yes.
What are some of the investments they should be wisely starting to think about?
I think if I was on the continent, I would be doing things that are relevant to the environment that I'm in. I can speak to Zimbabwe, where I come from. In terms of Zimbabwe, I think at the moment, purchasing land is a very big thing. People buy land, they develop that into units, and those units are rented out. Back to what I was saying in terms of the training of a traditional advisor. You've bought a scarce asset, which is land. You've created an income generating asset, which is a property, and you're earning an income, which is rent. If you're, again, in Zimbabwe, I think there could be an issue of power outages. So do you have a solar installation company? Because whenever there's a gold rush, you don't go out and start prospecting for gold, but you sell the picks and shovels because you're guaranteed to generate an income with everybody who's participating in the industry. And that could be even as simple as trading in the markets of your local economy.
Great. And talking about trading in the markets of it's so important for us to understand the markets wherever we are located or wherever we are investing. But let's talk about navigating the uncertainties that comes with the market. It is so historical, but that doesn't mean that it's not shocking. And for somebody who's learning and beginning in that stage of investing, it can actually be a total turn-off in terms of investing. So talk to us about navigating uncertainty in the economy.
So navigating uncertainty in the economy, there is what I call being at the coalface, which is normally for entrepreneurs. And as an entrepreneur, you'd really need to be dynamic because what's selling today might not be the one that sells tomorrow. Right. So as a business owner, it's about your dynamism. How fast can you change to that environment when you're on the continent? As a traditional finance professional, would be thinking of risk management strategies. And one of the most common risk management strategies, which most people do not think of as a risk management strategy, is insurance, right? So you'd be thinking if you're the main breadwinner and you're not in the picture, i.e. you're deceased, how much of a legacy are you going to leave, i.e. how much cash do you have? So in which case we'd talk about, do you have life insurance? If you're in a sophisticated market, you'd talk about other forms of insurance, total permanent disability insurance, income protection insurance, trauma insurance. You might even have what is called business expenses insurance. So that's how you'd be managing risk. So you can manage risk by outsourcing it, i.e. selling it to somebody, and you get something back, which is an insurance policy. You can decide to insource risk. So I'm going to make sure that I stash away funds and prepare for that rainy day. Or the odds are so low that I think I'm willing to bear that risk. Or this is a risk that cannot be priced out in the market. I'm just going to have to bear with the situation and plan as best as I can with the resources that I have. And those would be the ways that you'd be assessing your risk relative to the market that you're playing in.
Let's bring in the emotional toil that comes with investment, and particularly when you're a beginner and you're watching the markets go like this.
Yes.
What needs to happen, and is that time to pull out? What should we be doing?
Yes. To those listening from the audio podcast, Stacey points like this. The markets are going up and down. So as the markets go up and down, the worst thing that you can ever do is to pull out your funds. Because if you pull out your funds, yes, maybe you've gotten the directional call of the markets falling right. But if you've gotten it right that the markets are going down, at what point are you then going to be bold enough to put the money back into the market? And that is the toughest thing to determine. And most people, once they've accustomed themselves to the fear that the markets are going to go down, cannot cross over to the other side to be then brave enough to then buy. So you have to go back to the original conversation that you had about why you're investing. As a professionally trained advisor, we never invest for any period less than 5 years if we're investing in growth assets. So if you're investing in growth assets, you should have an investment time horizon of a 5 to 7 year period, if not even longer. And what's more important to think about is why you're investing the funds. If you're investing the funds for your later self, the average person from a Western world perspective is going to have a lifespan until their 90s. If you're going to survive until your 90s, unless you're telling me you're in your 80s at the time that the markets are being volatile, you should not be pulling your assets out of the market.
Right.
Yes.
Okay.
So back to what you've said, which I didn't address, unfortunately, which is the emotion. So that is probably one of the biggest jobs that your advisor plays within your financial life, because they're there as a counterpoint and a counterweight. An old mentor that I used to have would say that the job of a financial advisor is twofold: providing perspective and accountability. So if you don't have an advisor, maybe you've got a peer, maybe you've got a family member, maybe you've got a colleague that talks sense into you. So as soon as you find markets are volatile, before you act, make sure that you speak to somebody else and somebody that you value, that is sober and reasoned.
My family would for sure be saying, pull it out.
Yes.
Pull it out right now.
Which is why I'm saying somebody that is sober-minded and sensible is the type of person that you should be speaking to.
So ideally, how important is it for us to have a financial advisor in our lives?
I would say it's critical for everybody, but unfortunately, if you're in the Australian market, not everybody can afford one.
So if I'm in Australia and you can't afford one, how are you going to afford one in the continent? And so how are we going to invest?
Good question, right? You'd find that everybody needs financial advice. But then now the key question is, can you afford it, and should you be using one?
Yeah.
The majority of people can afford it and should be using one. It's just a matter of them figuring out what their priorities are. If you're like me and you're into your whiskey, maybe rather than having a stash of whiskey, you have a smaller stash of whiskey, and that pays for your advice. If you're on the continent, from Kenya to the degree that I understand, you guys have got a flourishing economy at the moment. The profession of advisors, from what I've seen on my LinkedIn connections, is actually a thriving thing. It's just, from what I understand, we don't have a tradition of looking out for advice because we didn't have to plan for the future. When I was growing up, I said that I'm a grandson of farmers. As a grandson of farmers on both sides, my grandparents on my mother's side, my grandparents on my father's side were farmers, which meant they had land to crop, and on that land to crop they also had cattle. So they never needed to have a financial hoard or funds to the side. So what I'm pointing out there is that there is a dynamic shift, and the dynamic shift is that when you're retired, you were expected to go and work in the city and then go and retire in the homestead. If you were going to the homestead, then that means the financial advice would be, have some goats out there, have some cattle out there. But if you're not going to retire in the homestead and you're going to stay in the city, then you need other resources. If you're in Zimbabwe, you would expect a pension from your employer. But now, with the way inflation is going, you now need a safety net. So maybe rather than seeing an advisor, just participate in the markets, which we were talking about earlier. So go and buy a property, or go and be a co-owner in a property. Maybe start a business, maybe trade your skills, maybe do some animal husbandry. So are you keeping guinea fowl, chickens, rabbits, things of that nature?
Right. You're in Australia and you can't afford a financial advisor. What are some of the things that some people could be doing?
I mentioned that online account that helps people with the savings, which is Acorns. There's really good podcasts, finance podcasts out there. There's one called Equity Mates. They're talking about investments that people are doing, what is going up, what is going down. There's multiple finance and business related podcasts. Those are all free. You ask people within your community, Stacey, you've been in Australia for a while. What are you doing with your finances? And if she doesn't have an answer, do you know somebody within the community that can do that? Ironically, for me to be sitting here in this chair as an advisor, when I first landed into Sydney, a friend of mine who was a nurse had another friend who was also a nurse, but they were part of an investing club. So there was 20 of them that used to pool their funds, and the person who was organizing their funds on their behalf was a financial advisor. So that financial advisor was then my mentor. The point I'm making is that within your community, as long as you're resourceful, you're always going to find a way to do it. Maybe you know me as a friend, reach out to me and let's talk. And that's a way to start. There's always a way to start.
And it comes back to building relationship, and it is important in building our wealth.
Without a doubt.
I want you to talk about that, because sometimes we just think of relationship and wealth is separate.
Yes.
And health.
Yes.
So let's talk about those three things and how connected they are, and spirituality. Let's bring those four in, and how connected they are.
Yeah. So if you read widely, there's books out there which say that your network is your net wealth. So the people that you network with are the people that lead to the opportunities that you're seeking. So if you're in business, the best people to sell to are family and friends, right? They already know you and they trust you. You're also not looking to cause them any harm, so you're going to find the best products for them, right? That's wealth. Health. Health is important to yourself, hopefully, and you want to live a long life. And if it's not important to you, maybe you've got people that you care about that want to see you around for a long time. When it comes to spirituality, it's normally an individual thing, but in the environment that I come from, spirituality is also a communal thing. So you've got a common ethos that you ascribe to. So your values are similar to mine, and because of that we get along. It could be because we look the same. It could be because our stories are the same. When you speak of your upbringing and you talk about how your parents used to talk to you, is exactly the way that my parents used to talk to me. If you talk to me about your dreams for your future, those are the same dreams or the same dreams that I have. That goes into spirituality. It might even go to your religion. What do you believe in? Because for the majority of people, relying solely on yourself without something that is greater than you, that you ascribe to, does not get you to the goal that you want, because you get to a point of overwhelm. So you might have an ethos that you believe in. You've got something that inspires you. You've got something that motivates you, that is larger than yourself. Because rarely do I find that people who are wholly self-contained, that's enough. For majority of people in the environment that I was raised, there's some form of spirituality that they have, whether it be African spirituality or Western spirituality, so Christianity, or being Muslim, or the traditional African beliefs that we do have in terms of our value system.
Lovely. And they all connect. And I think health more than anything, and I don't say this because my background is health, but when we're not healthy, then nothing moves, and health has to be really at the pinnacle of what we strive for. But it's interesting that you may find when you're struggling with health, then everything else is not working.
Absolutely.
When you're struggling with your wealth, then everything else is not working.
Yes.
So it's important to have those things balanced. And as you talked about it in the beginning, I think it's important when you're finding who you are to go back to those key elements of your life and see, are they balanced or where is the imbalance? And if you can fix that imbalance, then you'll find you're coming back to where you're supposed to be. As we are nearing the end, I really want to tap into our mind and money and how we relate with money and what prevents us from really investing or thriving or growing money. Because as we talked about in the beginning, is that some people are making money and they can make money.
Yes.
But they don't even know where the money goes, and they'll tell you, I don't know.
Yeah.
So what have you learned?
So what I've learned is that money has got nothing to do with money. Money has got everything to do with psychology.
Right.
Yes. So, and your psychology is just your state of being, your inner welfare. So I always find this almost a perfect correlation. If there's personal dysfunction within my clients, I see that dysfunction expressed in their finances.
Right.
If they're properly functioning and there's balance and they're whole, then I find that is also reflected on their finances. Their finances flourish. And I almost find a perfect correlation that if they are high earners and they don't have balance, then all that money goes out the back door.
Right.
So I tend to find that if you have money and you don't have balance, then that's not going to be reflected in the asset base that is building. Whenever there's balance, that asset builds and it continues to compound. Like you said, you tend to find that if there's no health, then the wealth is not there. Or if there's wealth, but there's no health, then that money is useless. So you still need that balance to continue to thrive and flourish.
Right. In terms of how we think about money, and some people do say, oh, the stories we were told, how much does our childhood and what has been modeled for us impact how we relate with money?
Yes, as they say, children learn from what you do, not what you tell them. A lot of the way that we behave as adults has a lot to do with the childhood that we saw. So if you saw your parents living hand to mouth, then chances are you're going to live hand to mouth. And like I said in the earlier analogy of expecting, so the modern populace that I find within the African context was we left, or at least our grandparents left the rural areas. You went to the cities, which were not necessarily meant for us to stay there permanently because you're meant to retire back in the homestead. If you grew up in that environment, it's no wonder that for us, we're still living hand to mouth because you never saw anybody saving up. It's just as simple as that. The only thing which is then we spoke about the successful executives, which we all should be, is then spending time in self-reflection. And in that self-reflection, you're now out in the diaspora, even in the African context, because you've left the homestead and you've gone to the city. And in you doing that, where you're going to retire, you're going to retire in the big city. And if you're going to retire in the big city, you need to have a nest egg. Then, okay, maybe retirement is too far out because that's 20 years out, that's 40 years out, and that's too long. Why am I focusing on retiring? Maybe you want to optimize the life that you've got now. You want to make sure that you've got a surplus within what you have so that maybe you can travel more. You want to make sure that you've got a surplus within what you have got. Maybe you can give more. You want to make sure that you've got a surplus so that you can pursue your hobbies. And that would be the way that I would be approaching it.
Great. In this journey, and we're talking money, what has been the significant lesson that you've learned?
I've learned you make your mistakes, you accept them, and you move on.
That easy said. Have there been a process, steps, things that people can pick up? Because learning, and it is powerful that we need to learn from our mistakes and move on. But if the mistake I'm making, let's again reflecting in money, if I'm about to lose $1 million that I put in the bank,
yes,
it's not that easy. So, is there a process? What has been the lessons for you?
So like you said, on the process of putting $1 million in a bank and then losing it, right? You've got choices. You put that money in the bank and you lose it and you don't move on. then of what benefit is that to you? Because it almost becomes, again, that's why I said money is not about money. It's got psychology, it's got spirituality, and it's got everything else, right? So in this instance, if you've got money and you don't have a healthy relationship with that money, then you can't necessarily move forwards.
Great. So let's talk about what you've learned. What have you learned about money and making mistakes?
Yeah. So I've learned money is almost like a personal journey. So understanding myself and accepting myself. How does that translate to money? Knowing what I want money to do for me. And in the majority of instances, I want money as a tool. I don't want to be dependent on it, but I want to have money to achieve what I need. I want money to travel. I want money to build assets. I want money for choices, right? So my relationship with money. Money has also meant control for me because I don't want not having it, which means that I now am forced to do things that I don't want when I don't want. I want to have options, and to have those options, I need an alternate resource. If I don't like what my boss is saying, I've got enough of a stash to then choose, hey, I'm not going back there because I've got money. If I want to express an opinion, whether be it how I choose to dress, I use my money for that. So I've learned that money is a tool. It's a vehicle. It enables. It's a utility, basically.
Right. At the beginning of this podcast, you mentioned something about that the people you work with, you do see some people that are highly successful. What has been the core ingredient you've noted for success?
So the core ingredient that I've noted for success has been resilience and clarity of thought. I've got a friend who says that your quality of life is based on the quality of your dreams. And in him saying that, he means be thoughtful about what your goals are related to the price that you're going to pay. So for the majority of my clients, they've figured out what that equation is and they play the game accordingly.
Right. And I'm trying to circle back as we come to nearing the end. Again, at the beginning of the podcast, you did talk about that you watched your grandparent, you watched your parent, and you knew what was missing was a formula.
Yeah.
Have you found the formula?
The formula is spend less than you make.
That's simple. It is interesting because no matter who you talk to and how wealthy they are and which walk of life they've come from, it always comes back to that.
Yeah.
But why is it not so easy?
For multiple reasons. Nowadays, 9 out of 10 times you wake up, you pick up your phone, you're most likely to go into a social app, even if it's not social, even if it's on YouTube, and everything is propagating consumption. If you're living in a world where the messaging is consistent and persistent, then after a while the programming is going to come through. So if you jump into your car and you turn on the radio and they're marketing to you, you can only resist for so long. So it's then an issue of the average of the 5 people that you spend the most time with. I don't think it's that figuratively means that 5 people that you spend the most time with, but I think it's the 5 people in a metaphoric sense that you spend time with. So what do you spend your time consuming? So if you're living in a consumer-based environment, which is where we are, right? Hey, what car did you pull up in? Hey, what are you wearing? Hey, what restaurant did you go to? Hey, how did you spend your weekend? Hey, what are you going to be spending your money on? Hey, how are you going to be traveling? All of that makes it difficult.
Yeah.
Then there's still the issue that we've already pointed out about the environment where you're coming from. If you came from an environment where there was no ethos of saving, it also makes sense. Then also our education system is not necessarily designed in such a way that we consume less. So in all those structures, you've got a system that is pushing against your goal.
Yeah, our education system doesn't necessarily make us think independently, and that can be a podcast on itself. So we won't go there, but it's been an absolute pleasure to host you at Freedom Fire, and we'd love to have you back again. But as we wind up, if everything we've spoken about today was wiped off,
Yes.
and everything that you know
Yes.
will be wiped off, but you have a chance and an opportunity to leave the world with 3 advice.
Yes.
What would those 3 advice be?
Wow, that'll be difficult. I haven't thought about this, Stacey. Yeah.
What is the legacy that you want to leave?
The legacy I would like to leave is that for the people that knew me, they knew that I cared, and I cared very deeply.
How would they know that when you're gone?
The question is, will they miss me? If they do miss me, then I've made a difference. If they don't miss me, then I haven't made enough of an impact. So what I'm striving to do on a daily basis is to make so much of an impact that if I'm ever not in the equation, they would at least spend that 1 second saying, those times were memorable.
Amazing, amazing. And that's a good place to stop. Memorable is what we want. We want the people that we love to think of us when we're gone.
Yes.
And we want them, no matter where they are, they're like, oh, remember Simba, and when I was in this, whatever, and he, I'm in a better place because I had that conversation. Amazing. Thank you one more time, our listeners that are wanting to be wealthy, because we are aiming for wealthy. How can they find you?
So they can find me on Henwood Advisory. If they Google Henwood Advisory, that should come up. My name should come up, website should come up, and the email address should come up. And also on LinkedIn, Simba Chilimanzi. So the Lion King, Chili Man, with single L, with a ZI at the end.
Amazing. Thank you for listening to us. Thank you for joining us for yet another episode of Freedom Fire. Please, if this was important to you, be sure to share, subscribe, and let somebody else get the wealth and the knowledge. Thank you, Simba, for being with us.
Thank you, Stacey. It was a lovely, lovely session.
Lovely.